Hey folks, well, the market is down again. The market closed down today 939 points, led by a pullback in Amazon and Apple. I know Amazon, last I looked, Amazon was down. Let's type it in here. Amazon down. The biggest one that I've seen, $406.30, almost 14% today. So, hey guys, this is moneyme. Welcome to my channel. I haven't done a video in a while, only because I've been quiet myself in the market, and I like to talk about all things money on this channel, but I don't necessarily like to just push out videos just to push out videos. I have been taking a backseat to basically trading stocks the past 2 months. Frankly, because stocks have been so bad that I've been trying to conserve cash and stop the bleeding in one account, and the other accounts have dropped too. And I am a private investor. I'm not a licensed broker. This is just full disclosures for entertainment purposes only. Don't take my advice. Just listen to what I'm talking about. I've been trading stocks, buying and selling for over 20 years. I've been in business and landlord and done a lot of things involving money. So I created this channel basically to talk about all things money, and I enjoy trading stocks and stuff like that. And you know, it kind of makes sense. Amazon today being down, and let me look at the I have my CNBC. I have the Webull pull. It's a new 52-week low today actually, and I'm going to highlight a bunch of different stocks here. Here's the one, the daily chart, and as you can see, let's look at, I mean, they missed their earnings, and it makes sense because when the pandemic, everybody was ordering online. Full disclosure, I actually sell items online as a third-party reseller, and that's what I do. One of the things I do for a living, for a job. But yes, a lot of the companies that were doing good in the pandemic just aren't having the growth that they had back then because the people are out spending the money at a variety of places. So year to date so far, this stock is down. 52-week range is 24.32 and 37.73. So obviously we know Amazon's a good solid company, but things are correcting. I mean, you can see here back in April 19th, the stock was at 31.49. Let's look at a weekly chart here, and this is the Webull desktop app. If you guys are interested in Webull, sign up. It doesn't cost you nothing. I'll put the link in the description. You guys can get free stock, and you deposit $200 and get free stock. So 37.73 was the 52-week high. I think they even announced when are they going to do the stock split? Let me look. I have two screens up here, so if you see me looking over, that's why. Amazon stock split. So obviously that will make it even. Things to know ahead. Yeah, on March 9th, March the 9th, they announced a 20-for-1 stock split. When are they supposed to split the stock? Yeah, Apple was doing a 21 for stock split too, and they announced in February. So, not quite sure when Amazon. Maybe we can look up here on the news. Yeah, Jeff Bezos, $21 billion. What I like about this Webull here, and it's free on the desktop, is you could pull up charts. You can really look at options today. Man, if you would have had even the 2500s, the 2500 puts today, where did they close at? Now I just got home from money to 25 puts. Last were 15. They were up 173%, but I know they were higher earlier as I was looking at them, because keep in mind the low of the day for the day. The low of the day was 24.32, so it even recovered 50 points. So at one time, those were $60. So you would have done pretty good buying some puts today. I did do actually a couple trades today. I got into a Netflix call, and I'm gonna highlight a couple stocks here. I got into a Netflix call today, and the stock finished down $9.16. At one time today, it was $204.71. I had 205 calls. I bought them for 50 some cents. They went to $2. I was hoping we were going to get to $3, and probably within 5 or 10 minutes it dropped right back down. So I did sell them and took almost about a $100 gain. That was about it. It was better than taking. I put $150 into them, so I took the $100. I had some Netflix has been getting, and actually bought a position in my son's account, small position yesterday at 188, 189-ish. I mean, that stock was 701 back on November 18th. And this, I'm basically just looking for a bounce. I mean, we've had a huge correction in Netflix, and you got some stocks now that have never. Netflix is basically at something like I saw something the other day. Is it a 4 year, almost going back 4 years? 180. Well, yeah, finished 190.36. It hasn't been this low since 2018. Yeah, 4 years. So 4 years. Think about that. 4 years worth of gains have been wiped out in 5 months. That's how bad. And if you watch some of my earlier videos, I predicted this market was going to correct 30%. I predicted the market will be down this year. I think I was calling probably will be down about 15%, but I think we still will be off 30, and that's the Dow and the S&P. But there's a lot of stocks that are down bigger than that, and I'm feeling it. There are some stocks I just can't believe it that. And again, I'm going to touch on a couple stocks here, and I'm going to create chapters when I upload this to YouTube, so that if you want to bounce ahead, Amazon, I'll have Netflix. I'm probably going to talk about 8 or 10 stocks. Going to keep the video short, but yet still, I like to do more videos, but I like to get more people to watch. And sometimes I know people say, well, be more consistent, put more videos out, but sometimes you need to just sit back and not panic. Let dollar cost average. Don't make no sudden moves. Stop trading risky trades. Get off margin. Stop trading options. Doing that. Today I was up like at one point $600. I closed up today only about $200 in one account. That's the one that I do more trading in. Actually did a position yesterday in another account for an HSA, bought into Southwest Energy. They are a natural gas stock, and that stock's been doing very well this year. And I mean, look at this stock. It was $1 back in February and had touched 868, and that's obviously due to natural gases being higher and oil being higher. They are a natural gas producer, but look how far it is when you really go out on the chart. I mean, we haven't been at the $14 range since 2016, which is obviously 6 years ago. And if you go back basically on the chart 2014, this was a $40-some stock. For a long time, it traded in a range of 25 to 50. I really think that with stable energy prices and holding, doing better, even though it's hurting the pocketbooks of a lot of people, that higher energy prices clearly are going to be good to the bottom line to companies like Exxon and Southwest Energy and stuff like that. So that's why we like the stock. We think sometimes some things get to a price point where they were actually too low, and that's the position that we're in probably about 3 accounts. This is one of the heavier positions now that we're in, and I honestly could see this stock $12 within the next year, and $7.50 to $12 is roughly 47% return. That's a good return. So we like Southwest Energy. We did get, like I said, into a small position in Netflix. It's just been beaten up. looking for near-term target of 220, 240. PayPal, look at PayPal. I mean, PayPal, was $310 back in July 30th of 2021, and less than 9 months, it's now down to $82. Tesla, as you guys know, if you follow the market and follow the news, Elon Musk put in he's buying Twitter, so he sold $8 billion worth of stock this week to help fund some of that purchase. He is like the largest shareholder, and it's been a little bit of a roller coaster lately, but yet there's a lot of people that still believe in Tesla. Tesla has been one of the best, really the last 10 years, Tesla has been one of the best stock performers. Here to the left, you'll see like FUBO. FUBO TV, it has been killing my account. We got into it some at 18, 19. Here it is at under $4. So we're not adding no more to that position, but just been taking a beating. Facebook, they had figured. That's the thing going back with Netflix. Had you put like $500 in it when it dropped the other day, the day before, you're going to turn that easily into $30,000 in options overnight. So that's the power of options. Facebook actually beat, and the stock was up the other day with their earnings. And I think there was a lot of people that got into puts and thought, well, that's going to pull back, and it didn't. It was up. Something like 35 points. Obviously today, with the whole market being down, it gave back some of that. I did very well with VERU 2 weeks ago. That stock went from 4, I sold at 12, and I saw it go to 17. But I had another account, I sold at 17. We got back into position, some at 14. The stock is around 12. So we're not as extended as we were on it. Had taken a beat and had got in around $12, $14 on a lot of it. And when it was down to 4. When it came back to break even, we were just happy to kind of cut the position and own less. Ford, we're in a position just because we think it's one of the best car companies. We're in it. We just got into it last week at 14 and change. No big deal. Here this stock was even $26 back in the beginning of the year. We have a short position in Coke, only because honestly, it's historically Coke right now. People are still buying soda and stuff like that, even though with tough times, but the prices is higher. Coke has a dividend yield of 2.72%. Actually, for the year so far, it's got a 27 PE. So 27. It's a slow growth stock. Its earnings per share is only $2.37. It's one of those that when the market does, like today, it was down with the market 2.48%. So it was down $1.58. So basically, it was in sync. The market was down 2.7%. Coke was down 2.4%. We have a small short position in it. Not looking to make a little money, looking to probably make 5 or 7% on it, and to have some sort of short position since we feel the market is in a correction and will be volatile for a while. The next company that we are short actually on and added to today is McDonald's. McDonald's today was down 2%, even though McDonald's had good earnings the other day. We're a little early in this short position. We are underwater by about $15, so I think the McDonald's, $2.50. We're a short position at around $2.35, so we're underwater a little bit, but we added a couple more shares to it today. I saw that it in March 10th it was $2.17. And you can go back and see that it was $2.71 back in January. They closed the Russian stores and took a big hit there. We honestly, again, it's just one of those positions, a blue chip solid company not going anywhere. But again, it trades at a 32 PE. So if the market is corrected, it has $9.47 earnings. if the market is going to correct, another 10 or 15%, this stock for sure will go down in sync with that. So if the market's going to go down another 10%, McDonald's basically should go down another 10% and be around 225. We'll make our 8 to 10% on that, and we're adding a little bit to it to kind of dollar cost average. Ollie's, I recommended earlier in another video on the channel. We got in and in the 40s and actually 51, and we got in 2 or 3 times. We sold out. We're waiting for it to kind of pull back again. I like Ollie's. Ollie's is a bargain center where people can go and buy groceries, households, clothing, and different. It's not a huge chain. It's actually based here out of Pennsylvania, in Harrisburg, Pennsylvania. I'm from Pennsylvania. I live on the East Coast, up in the Poconos. I'm only about an hour and a half west of New York City. The market cap is only $3 billion. The price times earning is only 1920. It does about $1.8 billion in revenue. It's a small chain, several hundred, but they are expanding, and they are announced. And I like companies that are still going to stay around, even with the good times and bad, and not trade at heavy multiples. Kohl's, we've been in and out for the same reason. There was a buyout offer. They didn't take. Disney, I tell you, is really looking compelling here, but Disney's got caught up in some political and stuff that, honestly, I think that Disney should 203 back in March of last year, and even back in November it was 180. Now it's back down to 111. If we zoom out on a weekly chart, 111 basically is touching where it was back in like September 2 years ago. I tell you, I'd be tempted if we get this closer down to $100. I'd probably be tempted to buy some shares. So there's going to be opportunities that are coming up. It has a new 52-week low today. Disney, again, they got caught up in the political stuff. They have a huge PE, and that's because the parks have been closed. The wages are going up. They've had a lot of growth in their Disney Plus TV. There's been some cancellations again with the pandemic. A lot of people signed up for those type of things or shop certain services now. That with the food prices being higher, certain things are getting canceled and gas prices higher. So, but if you're looking 5 or 10 years out, I see Disney being fine. I just read an article also on Disney possibly building a park in Texas, and I think Disney is a great brand. I'm a little biased. I go to Disney once, usually every 2 years, and have been down there the last 2 or 3 years, so I enjoy Disney. Poshmark, I'm in. They sell used clothing and stuff. And then that stock's been brutal. That was an IPO. As you can see, it was $104.98 last year in January, and here we are down to $11. It basically has no debt, from what I understand. Unless something changed in the last week or so. But the market cap is basically $860 million, and they have close to $700 million in cash on hand. They are spending money to basically, always to push their brand and stuff like that. But it's one of those situations where the price was right, but we're still in it. We're in this one around $18 and a large position in 2 or 3 accounts. So I mentioned Apple at the beginning of the show. Let's see where Apple was at. Apple today was down 3.7%, which not as bad as Amazon. Amazon was down 15%. So Apple today was down $5.99, 3.7%. 52-week range is 122.25 to 183, but the market cap is $2.6 trillion. I remember it's got a 26 PE. So I mean, again, if we get a correction, I remember when Apple just crossed $1 trillion market cap. Apple's been a tremendous stock the last couple of years. They got great products, and obviously everybody knows, you know, the Apple iPhone and what they offer and stuff, but a lot of that don't matter when it comes to, stocks. Microsoft was down $4.12, 4.12%. Microsoft, I think, could be vulnerable just because it's had a tremendous run. Microsoft, basically, its 52-week range is 238 to 350. And let's look at a chart 5 years ago. I mean, that stock was under $75. So they've had a tremendous. I remember Microsoft probably in the last 10 years. Let's look at a monthly chart here. Let's look at a weekly. Microsoft back in, was in the $30 some range. So I mean, you basically have gotten tenfold in the last 7 years. So we are definitely in a correction, and don't panic. If you're still doing your 401k at work, you're getting the match from your employer. That's good. At the end of the day, that's free money, and we definitely are in a correction. This market will be volatile because people will trade it. It will go up, it will go down. It will, people will look for opportunities like myself with Netflix to recoup some of that loss that has been lost, especially in the last couple months. And those are sometimes great trading opportunities. But be very careful. There's a lot of big stocks, and I'm gonna really try to start doing more. You want me to do more videos? Give me the thumbs up and subscribe to the channel. Comment below. Tell me what stocks you like. Tell me what stocks that you want to talk about. And we could sit here and go through them, and I could tell you what I think. I could tell you the companies that I've been involved in. And I was in Moderna. Took a small loss. I saw that it was kind of pulling back again. I took a small loss and got involved in Netflix. And I feel like right now there's a better opportunity in Netflix than there is Moderna. Because Moderna pretty much is just the COVID vaccine. And if they're giving less of that, that means less revenue. Even though they've made a killing the last 2 years, this could be a really tricky stock, just because they have nothing else in the pipeline. And if the next year or two people are fine and don't, their revenue is going to take a big hit. So, all right, guys, I really appreciate you watching, listening to me. Welcome to my channel, moneyme, if you're new here. And comment below, and I'm really going to make an effort to try to do 2 or 3 videos a week, and I'll have some, not just talk about the stock market, talk about real estate, talk about CDs, talk about different things related to money. So enjoy your weekend. Don't panic. Don't dump a big amount of money into the market. If you're dollar cost averaging in your IRA or 401k, this may be the opportunity. These are definitely opportunities. Will everything be an opportunity? No. Could it get worse over the next year? Of course it could. If the economy, we're sort of in a weird period of time, because we have a shortage of supplies, and we don't even have the workers, but we have wage inflation, we have food inflation, we have obviously oil inflation. So a lot of things are driving up the cost of continuing to run business, which is hitting the bottom line. So that definitely is going to hurt stocks, and I think the administration that we have in right now is not too friendly towards the stock market. And to starve off inflation, they're raising interest rates, and we could maybe go too fast in raising interest rates and actually hurt the economy. So we'll see. Again, don't fret. These things will pass, and there will be huge, tremendous opportunities at the right time, and there'll be disappointments. I know myself. I wish, wow, I mean, I would have cashed out 9 months ago in 2 or 3 accounts and bought some now, but that's timing the market, and that's thinking that you know it all. And honestly, I'm not a licensed broker, and how many analysts will tell you when Netflix was $600 to keep buying it, and now all of a sudden it's like, oh, it's only going to be a $400 stock, and here it is at $189. So back then people were saying, oh, it could go to $1,200. So that's sometimes what can irk me, but it is what it is. So have a great weekend, guys.